Most crypto projects promise to change the world. VeChain actually showed up to a boardroom and proved it. As Walmart signed, BMW signed, DNV signed, the founder was the former CIO of Louis Vuitton, China, and his corporate experience was a huge plus for institutions. But today, the token of this seeming institutional darling sits 98% below its all-time high. So what actually happened? How does one of the oldest enterprise blockchain projects in crypto trade this cheap while its partners include some of the biggest companies on the planet? That's exactly what we're going to answer today, along with the math on how many VET you would need to retire as a millionaire. Let's get into it, guys. This is not financial advice. Always do your own research. The year is 2012. Sunny Lu is the CIO of Louis Vuitton, China, dealing every day with the hardest counterfeiting problem in luxury retail. He tries to buy 100 Bitcoin on Taobao for a World of Warcraft game, pays $300, but the coins never arrive. Instead of walking away bitter, he opens the Bitcoin white paper, and this stuck in his head. A trustless ledger with no intermediaries and records nobody can change. It was a solution to the exact problem he faced at work. How do you verify something is real when no one in the supply chain fully trusts each other? Yet, he still needed inspiration, which is why he spent time in Shanghai discussing smart contracts with our dearly beloved Vitalik Buterin. By 2015, Lu founded VeChain, and the thesis was quite simple. Blockchain only matters if it does something real. In 2017, the VeChain team launched their cryptocurrency, VEN, on the Ethereum blockchain as part of a crowd sale that raised $20 million and sold 1 billion tokens. But a bit later, when the VeChain Thor blockchain was released in 2018, these tokens were replaced with VET tokens at a 1:100 ratio. The chain runs a dual token model, as VET is the token you hold, while VTHO is the gas token generated by staking VET. That separates value from fees so that enterprises can predict costs without being exposed to token price swings. But things are not looking pretty for VET in the present, as the price is approximately 0.04 cents, forming a market cap of around $380 million. Therefore, it's time that we examine VeChain under the hood. In all fairness, the project's tokenomics just went through the biggest overhaul in its history, called the VeChain Renaissance. VET supply is capped at 86.7 billion, nearly all of which is already in circulation. And it has no hidden vesting cliffs or surprise unlocks, which I appreciate. The Hayabusa upgrade, live on mainnet since late 2025, changed how VTHO works too. Previously, every wallet holding VET generated VTHO automatically. Exchange wallets holding billions of VET created endless gas supply without contributing anything. But that ended. VTHO is now only generated by staked VET, and within just 3 months, 13 billion VET tokens were staked. VTHO inflation was cut by roughly 72% at launch. In fact, the annual inflation started at 0.6% and will reach 2.9% when 60 billion VET tokens will be staked. What's more is that 100% of the base fee on every transaction is now permanently burnt. But then, a huge institution came in as a partner. Franklin Templeton was responsible for bringing tokenized financial products to the network. When it comes to staking, it runs through Stargate, which is live since July 2025, and the way it works is the following. You stake VET, you receive a staking NFT, and then you delegate to validators for rewards. VeChain seems solid, yep, but it is not trying to be the next DeFi hub. The goal was always different. Take blockchain out of the trading app and into the real economy. Track products, verify authenticity, log data that businesses and regulators actually trust. And guess what? Companies are using it for exactly that. Walmart China traces food from farm to shelf on VeChain. BMW built Verify Car to fight odometer fraud. H&M uses it for supply chain transparency. Lululemon China, DNV, and Franklin Templeton are all active on the network. Over 530 million lifetime transactions processed so far, with a flawless 100% uptime since the mainnet launch. On the consumer side, VBetter rewards users with better tokens, that's B3TR, for real-world actions like exercising, reducing waste, and using electric vehicles. That's the consumer growth engine running alongside the enterprise side. But we haven't even talked about the biggest announcement yet. VeChain just unveiled Agent Suite inside VWorld, an on-chain marketplace where AI agents can be hired to run tasks for users and businesses 24/7. VWorld, which already has over 5 million downloads, becomes the interface where everything converges. That's your wallet, your staking, your tokenized real-world assets, token swaps, fiat access, and now AI agents working on your behalf. The agent marketplace is described by the team itself as the crown jewel of the 2026 roadmap. That's 10 years of infrastructure building, finally with an application layer that non-crypto users can actually use. Next is the Interstellar upgrade, bringing full Ethereum virtual machine compatibility to VeChain Thor, which will allow developers to build on VeChain using MetaMask and standard Ethereum tools. Right now, that friction still exists, but Interstellar removes it completely. We're on track to get to the millionaire math, but before that, we have to talk about what could go wrong. First, the brand gap. VeChain has been building real enterprise partnerships since 2015, and yet the token is still down 98%. That tells you something important. Corporate adoption and token price do not necessarily correlate. Walmart using VeChain to track lettuce does not make anyone buy vet. Until there is a clear reason why enterprise activity flows back into the token, that disconnect remains the biggest risk in my opinion. And another major one, a risk that everyone's aware of, that's centralization. For enterprise clients, that's a selling point actually. What businesses use VeChain for is supply chain traceability, product authenticity verification, transparency. In fact, these companies attach smart chips to products or packaging, and as items move through the supply chain, data is recorded about origin, authenticity, certifications, sustainability, etc. However, for the crypto market, the crypto bros like us, which prices decentralization as a core feature, there's a reason to look elsewhere. VeChain's validator nodes require verified identities and KYC compliance. A lot of retail investors simply just won't touch a chain where identities are known and transactions can theoretically be censored. And I completely understand that sentiment. So, now that we have this persistent gap between real-world enterprise usage and token performance, it's useful to look at VeChain's price history to understand both how far it's fallen and what a recovery might require. The VeChain mainnet is launched in June 2018 at around 1.3 cents. The price later crashed to an all-time low of 0.016 cents in March 2020. But then, boom, it went on a 175x run, peaking at 28 cents in April 2021. Fast forward to today, and the current bear market did not spare VET, and the price hit a cycle low near 0.044 cents in mid-2026. Today it trades around 0.04 cents, and we'll use that peculiar number as our reference price. You've got the background, so let's dive into the three distinct millionaire scenarios. First is the bear case, which comes in strongly already at 5 cents per VET for a 12.5x return from today. That's back to early 2021 levels before the big run, giving us a market cap around 4.3 billion. You need 20 million tokens costing roughly around $80,000 today. Next up is the base case at 10 cents per VET, returning 25x on our investment. That makes for an $8.6 billion market cap, which is still less than half its 2021 peak valuation. 10 million VET tokens are required in this scenario for the cost of about $40,000. That's all good, but you're not ready for the bull case. I'm calling 28 cents per VET here, so that we return to the previous all-time high, 70x. 70x, guys. The market cap smashes the incredible $24 billion. Believe it or not. In this most optimistic scenario, you gotta grab about 3.6 million tokens today for something like $14,500. Peanuts, just peanuts. Well, there it is, guys. Sunny Lou went from losing $300 trying to buy Bitcoin to spending a decade building a blockchain that Fortune 500 companies actually use. That is dedication. And it seems to me that at 98% below the all-time high price, the market is simply mispricing VET right now. The millionaire math is attractive from these levels, but the risks are also equally significant. And now you know the drill. From here, if you want more deep dives like this one, make sure to like, subscribe to the airdrops.com channel, and drop a comment on your thoughts on VeChain's future. I'm Stan, and I thank you for watching. I'll see you next time. Ciao.